Where the NIC 20 managed briefly to maintain some upward momentum, the rises that we had seen are based on pretty slight movement. So hardly surprising that we saw some pullback yesterday, one would assume.
Well, I think we are approaching Easter. I would expect this to happen. Most people are looking forward to the holiday, so I think it's just a short-term effect. Of course, I know we have all these issues with inflation and investors having less disposable income, but I still think that this is a temporary correction. And so I do expect that by next week we should see the market start.
Especially when the market's getting nice incentive. Looking at a company like Scangroup, it was out with numbers yesterday and posting a 54% growth in pre-tax profit for the year ended December. What did you make of the numbers and in turn the kind of market reaction it received?
Well, we did expect Scangroup to post impressive profits. They've been doing, very strong horizontal takeovers. The expansion has been very strong. They have now the strongest market share in their business segment, and I believe that their business model is working for them. We have seen their price actually go to very great highs compared to their price on a year-on-year basis, and so we quite expected Scangroup to be giving us the sort of results they gave. I believe that investors are smiling all the way to the bank, but I also think that they're still showing that they need to expand more in giving a bonus, meaning they want to release some funds, and even though they gave some dividends to make investors happy, that is a signal that they are still looking to expand their market footprint.
So taking a look at a player like Scangroup, how are you viewing it right now? Value stock or growth stock?
Well, at the moment, we are actually lying there in the center because well, the growth stocks are the most promising, to be honest. But the problem is that with the levels of inflation, with the low levels of consumer disposable income, we are seeing there could be a slight slowdown in the speed at which we expected growth stocks to accelerate as the economy grew for the second year running. So I think investors will still continue to hold on to the value stocks for now until maybe they see what's really going to happen with the economy before they start to shift towards growth stocks.
Well, we've been saying over the past couple of weeks already that a player like Scangroup in that advertising space, very much like the banking stocks, correlated to GDP growth. And so hardly unsurprising that we're starting to see some growth filter through there more strongly as companies start spending on ad spend, specifically more aggressively. Taking a look at a player like East African Breweries, though, Samuel, it's a counter that's managed to withstand the global financial storm. It seems it's edged up marginally to 202 shillings, and this on sustained a kind of interest that we're seeing from foreign investors in particular. How are you viewing East African Breweries at this stage?
Well, I think the thing we are seeing on East African Breweries is really also happening to most of the other defensive stocks that we have on our market. And I think that is because we saw foreigners exit heavily and stay away from the market at the onset of the North African crisis. But after Egypt got back on board and they did their bargain hunting there, we've seen them come back very heavily to pick up those stocks that were that were bargain stocks at the time, and I think that has really gone to the advantage of mainly the blue chips, because the foreign investors seem to be very interested in that, and those that had lost some value during that period have really rebounded at this point in time.
Of course, it's not just the fact that it sits as a blue chip counter, being the reason as to why it's getting the kind of attraction it is. It's also on the back of its fundamental business strategy moving forward. We had the brewer launching this week a new design for Tusker, which is its flagship brand, and that in an effort to grow its sales. What are you making of the company's strategy and how it's looking to pursue growth from here on out?
Well, I think there are still quite a few challenges in that we have the new alcohol law, and that is really, we still haven't gauged what effect it will have on East Africa breweries and its major competitors. But I think that East Africa breweries is still showing very strong resilience. They're still showing that they're very optimistic about their market, and they're still looking for ways to reinvent their brand to make sure that they keep those sales going and they stay in there. But we have had them complaining that the alcohol law has seemed to benefit the illicit brews rather than get them out, and in which case that was what it was meant to do, and that is really hurting their business. But I think at the end of the day, they have the resilience, they have the reserves, and they have the power to be able to sort of, you know, withstand whatever storm comes their way, at least in the medium term and probably even in the long term.
Well, Samuel, this is a counter that may well receive some a nice fill-up to that regulation that was imposed in terms of the alcohol control law, in that Kenya has now slashed fuel tax to ease the impact of price rises. How do you see that impacting the Kenyan consumer, and how exactly they're going to be spending and loosening those purse strings moving forward?
Well, the fuel issue is a rather difficult thing to deal with at the moment because, of course, we've seen accusations being thrown to and fro as to who's to blame for the huge increases, and the government trying to bring prices down but still not satisfying. And I think that this is really going to hurt the lower end of the consumer, and that is really a really difficult thing to do. And I believe that at the end of the day, we need to have some sort of mitigation or some way, either reserves or to be more prepared for this sort of upheavals, so that the economy can deal with them, and in the short term and in the medium term. But basically, I think we are going to see investors having less in their pockets. It will probably affect the local investor on the market, but I still think that our market has been moved more by institutional and foreign investors, and so we are not going to see a huge effect on the market.
Of course, Kenya has cut taxes on kerosene and diesel by 30 to 20%. Let's take a look at impact on oil marketers, specifically the likes of a Kenyan Cobalt. It was down 0.5% yesterday. It's trading at the 9 shilling 70 mark. What are you making of that counter at this stage?
Well, I consider Kenyan more a growth stock, and they have been expanding very heavily. And usually, even when fuel prices, fluctuate, they just shift that to the consumer. So I don't see their bottom line really suffering. I think the company is very strong. It's actually getting more and more of the market share, the local market share. And so I believe that despite that slight change in price, maybe a sentimental view of investors, it is still a stock that I would be very interested in.